New weekly outlook. It is NFP week, and the tape is being driven by three things this week. Number one is a newly released White House 20-point plan to end the Gaza war. Number two, a cautious Fed into the October meeting. And number three, the labor data with a possible US government shutdown that could delay prints. So let's break it down. Today we had US President Donald Trump and the Israeli Prime Minister meeting at the White House, and shortly after the meeting, the administration published a 20-point plan designed to end the Israel and Hamas war immediately if both sides accept. Trump also warned that if Hamas rejects the deal, then Israel would have the full US backing to destroy the militant group. Some of the things that are part of this plan, if it is accepted immediately, or if it is accepted by both Israel and Hamas, is that the two-year conflict would end immediately, and all hostages and the remains of those who have died would be returned within 72 hours. The agreement also says that Israel would release nearly 2,000 prisoners and would not occupy Gaza anymore, along with allowing aid to resume immediately. On the other side of that, Hamas would disarm and have no direct or indirect role in governing Gaza. Control would shift back to a technocratic, apolitical Palestinian committee that would be overseen by Board of Peace, chaired by President Trump, with other global leaders, including the former UK Prime Minister Tony Blair. A key diplomatic detail here is that while the discussions were going on, Trump also set up a phone call between the Israeli Prime Minister and Qatar's Prime Minister, in which the Israeli Prime Minister expressed regret to Qatar's Prime Minister over a strike aimed at Hamas leaders that accidentally killed a Qatari serviceman. Qatar is a key mediator between Israel and Hamas and host of the largest US military base in the region. So that is why this matters for that momentum for continued Middle East peace. This is pretty optimistic, and from a ceasefire perspective, and if Hamas does agree, then we are going to see more of that risk on sentiment. But if the talks stall out and Hamas does not agree, then we're going to see those safe haven bids again. On the Fed front, we do have some developments here, and we are going to be watching any Fed developments very closely, any FOMC members who will be talking in their speeches, and any hints at, are we going to see an October rate cut, which is highly likely, and the market is already pricing that in. And if we're going to see a December rate cut, or are we going to stall out in December and then resume with the rate cuts into next year? The Federal Reserve Bank of St. Louis president says that he's open to further rate cuts, but wants to tread cautiously here, given that the policy sits between modestly restrictive and neutral, and the Fed will lean against inflation if tariffs or supply constraints reheat the prices or increase the inflation here again. So overall, like I said, the market's already pricing in those October rate cuts, but they're still very data dependent. And that's why this week's data is going to be so important. Then we have labor data that's coming out, but if there is a US government shutdown, then we would see that a lot of the federal economic data reports will be suspended. So that's why that's important, where we have funding lapsing on October 1st. And if Congress misses, then NFP could be delayed, which is going to add more uncertainty, especially as we're going into the Fed meeting for October and looking at potential rate cuts. Right now, this uncertainty is also helping treasuries bid and keeping gold at record highs. Right now, US gold reserves have hit $1 trillion in value after a record rally this year of 45%. So if we see that the uncertainty continues, then we will see that continued rally from gold. This flow into gold and the massive rally also shows us that there is a massive safe haven demand at the moment, and there are softer real yields at the moment that the market is pricing in. On the back of that, we also see that the US dollar is starting to become more weak, especially as we're headed into this NFP week, which is really going to be kickstarted with the JOLTS job openings tomorrow, which we're going to go over in the economic calendar shortly. But we see that the dollar is getting weaker and it's getting softer, but it took the biggest hit against the yen, as much as 0.7%. And that is especially because at the same exact time as dollar is getting weaker, the yen is also getting stronger because of the BOJ hike chatter that's going on. So we're going to be watching USD JPY very closely, especially as we start to see the US labor data coming out. And if it's weak, then that's going to give a bigger hit to the dollar, and we're going to see that USD JPY is probably going to be pushing back down, and we're going to be looking for more sell opportunities on the pair. With that being said, let's take a look at what kind of data we have this week. We start off quite easy. Things really start to pick up tomorrow where we have the JOLTS job opening. So that's going to be one key thing that we're going to be watching out for. Wednesday, we have ADP non-farm employment change coming out along with the ISM manufacturing PMI. And then on Thursday, unemployment claims. And then we have BOJ governor who will be talking. So that's going to be very important for the US JPY, GBP JPY, and Euro JPY pairs. And then Friday, we end off with NFP. So these are the key data points that we're going to be watching out for this week, along with any developments on any of these major headlines. Now let's go over to the technical side and take a look at what's going on. Let's start off with USD JPY on the weekly time frame. Last week we closed doji bearish, so not a lot of momentum. Same thing this week. So far, we've already had a full trading day close with Asian, London, and the first New York. And now we have the second Asian session of the week and the market pricing in all the fundamentals that we just went over. So far this week, US 30 has created a high at 46,500. And we can adjust this as we drop down to lower time frames. And then we have a bottom wick rejection around, let's say, 46,150. I want to use round numbers so then it's a lot easier as we're doing the entire analysis for the entire week here. On the daily time frame, the last daily candle, a top wick, pretty close to that 46,500 mark, and then that bottom wick rejection here already. I'm going to drop down to the 4-hour time frame. There's nothing else I would mark off on the daily. On the 4-hour, we start to see a clear consolidation. We can narrow in that consolidation even more to see our scalping buy opportunities going into the next Asian, London, and even potentially the New York session. Here for any buy opportunities, I do see that price pull back down here, early London session, and then we had price establishing a support going into New York, push back up, and then we just held onto a resistance here, and that was a previous resistance level as well. So if price can simply make a bottom wick here and then flip back up bullish, then we're looking for those buy opportunities to the upside to come back into that 46,500 mark. And that could be that zone to zone trade. If price rejects this and then pushes back down, then we're looking for sells as price breaks below this minor resistance right about here and continues to push back down. When that happens, price will be breaking its own low and give us enough bearish volume to break the previous low here on the 4-hour time frame and continue to the downside to 46,150. In either direction, we have about a 100-point move. So, and 100 point is not really a lot on US 30. It's really easy to catch 100 points in either direction. When we drop down to the 1-hour time frame, we start to see the consolidation a lot more clear. So nothing in between, and we're only looking for buys above the zone as 1-hour consolidation is broken, or sells right below the zone and continuation back down. So the theme really here for USD JPY is going to be to buy the dip, but we're going to be following the data very closely because it is going to be very reactive to any labor data that is going to be coming out, because all of that is a forecast of what are we expecting going into the end of the year. GBP USD, we have the candle body open right here on the weekly time frame, no bottom wick whatsoever, so I'm going to mark that off. And that is going to be that 1.34 level for that support. And then we have a resistance with the top wick rejection right here. And that is my current range unless price can break that high and keep pushing. And that is going to be that 1.346. I drop down to the daily time frame and I see that this is exact area on average. Anytime price rejects it, there tends to be a ton of bullish volume to the upside as soon as it establishes a support here. So here on the daily time frame, we had a push back down. We came back, and for the most part, we have rejected these previous wick rejections right here and then push right back up bullish into the zone. So with this current daily candle for a swing trade buy opportunity, I need that 1.346 level to be broken and then continue to the upside. And we can look for those buy opportunities to come back and tap into this overall level of around 1.358. And then if price rejects that and then pulls back down, then we're looking for longer term sells. So first, break that 1.346 for those buys to come back up into these previous highs here, or for sells we need the previous daily low here to be broken and then continue to push back down and target into the support area here. For any day trade or swing trade opportunities, we drop down to the 4-hour time frame. We have a support formation right here. If price can break that support, then we're looking for quick scalps to come back down into that 1.34 area, and then you can turn that into a day trade as price continues to push back down bearish right here. If price establishes a support here and then pushes back up bullish, then I'm waiting for the current 4-hour or even the previous 4-hour high here to be broken. And then we look for those buys to the upside to 1.346. When you drop down to the 1-hour time frame, that consolidation becomes a lot more clear. So we're not really looking for a trade unless price can break above this zone and then push back up bullish and then continue that bullish rally to the upside, which could happen given the fact that the US dollar is becoming weaker. And then if we do have weak labor data coming out, then the US dollar is expected to get even more weaker than it is right now. Then we go over to Euro USD, and we have a weekly support right here, same thing, no bottom wick, candle body open at 1.17. And then we have a top wick rejection right here into the previous resistance level right here. So that is our zone to zone trade like the last couple of weeks, 1.176. Come on to the daily time frame, and then we see a lot of rejections, has been respected as resistance here in the past. And then after that, price pulled back down. And then the last daily candle here, no bottom wick whatsoever. It seems like there was a bit of a gap. So we're waiting for price to come back and respect this area support and then keep pushing back up bullish for a zone to zone trade opportunity. We're going to drop down to the 4-hour time frame to really narrow in our zones. For any sells, we would want price. I'm looking at all this price action here to the left as well. I would want price to clear below this. So that way it's clearing below this resistance that price formed. And then if I look to the left, that zone has been respected as resistance multiple times. And the price came back and rejected into that 1.7 or even lower. So right now, overall structure based off of higher timeframes is quite bullish here. And we are starting to consolidate. So that's why we're looking at potential sell opportunities to come back and respect that 1.17 area as a support and then continue to push back up bullish. It seems like we're waiting on the data. And again, if the data does come out weaker, then that would really push this pair to come back into that 1.176 area. And we have GP, JPY. Starting off with the weekly. And this is the candle body open. This shows us that this week the yen has been stronger. And again, that is coming from the fundamentals, the fact that the yen is becoming firmer on that BOJ hike chatter that's happening. So we're going to be watching, any developments around the yen. And then, of course, on Thursday, we have the BOJ governor who will be talking. And this is 199.3 support. The resistance is 200.3. Adjust that when you drop down to lower time frames. So here on the daily time frame, I see that that's a very strong support level. Price bounces off of that, and then we look for those buying opportunities. And then here, that's a very strong resistance here as well. So overall, this is our zone to zone trade for the last couple of weeks. Come on to the 4-hour time frame. For any quick scalp opportunity, I want price to break below this support here and then push back down bearish. Right now, it seems like it has established a support, but we don't have enough volume to break above this high right here, which we see is a previous established support, push back up, consolidation right into this area. So overall, between these zones, we see a lot of rejections. So if price can't break below this zone, then we're looking for sells. If it makes a bottom wick, flips back up, then we're looking for buys to come back into that 200.3. USD JPY, we just looked at an article that very specifically talked about this pair. You have 149.5. This week kind of has a bottom wick rejection, but it seems like we are still quite bearish. So this is our zone right now. And if price breaks the weekly low, then we're headed back down into these next support areas. You would target the bottom wick of the previous weekly candle and then a continuation down into the support. If we start to see that the dollar is truly a lot weaker than the yen, or the yen just gains more strength in general. Then based off of the daily time frame, we see how that is a consolidation resistance right here. Price pulled back since Friday and then yesterday's daily candle. Right now, we have kind of made a top wick. We don't have a clear direction here just yet. And then if I look to the left of where price has made a top wick rejection, then I see that there is a resistance formation here. So for any buys, I want price to break its own top wick and then keep pushing back up bullish. into 149.5. And then after that, increase the TP up to 149.8. And then after that, a clean move up into 150. If price does not push back up bullish, which is unlikely given the fact that the dollar is weak compared to the yen right now, but if we see more strength in the yen, then we're looking at sells below 148.5 coming back down into a consolidation support here. So the first target being 147.6 and then a continuation down into 146.88. Anything in between, when I drop down to a lower time frame, I see consolidation. So I would not be trading anything at all here, not even a zone-to-zone trade. And then we have gold. Gold is sitting at record levels. So we have barely a top wick here. So there's really no clear resistance that we can really map out here. But the support can be the weekly candle body open, which is 3762.7. Come on to the daily time frame. That's barely a top wick that the current daily candle has formed, and then that is the resistance here on the daily time frame of the previous little bit of a pullback and then a continuation back up. Come on to the 4-hour time frame. Pretty nice bullish momentum to the upside. If anything, I would mark off these candle bodies right here of where price pushed back up. That's the first candle that really filled in that bearish candle top wick rejection. The next 4-hour candle made a bottom wick rejection and then pushed back up. And then after that, we see that continued bullish momentum. Come on to the hourly time frame. And it seems like price is holding on to a support right at this level, which was a previous resistance, and then pushes back up after a bit of a consolidation. So here, what I want to see is either a consolidation or a pullback and then a continuation back up for those record bullish momentums to the upside. If that happens, then from a fundamental perspective, we are also looking for more uncertainty in the market, no clear direction on the development with the 20-point plan, for example, from the White House, or if the FOMC members saying that they're uncertain about, for example, those rate cuts going into December. We know October for sure we're going to see another rate cut. Or if we see that we still don't have any progress on this US government shutdown that's happening, or we're looking at, for example, Joe's job openings that comes out weak. So there's a lot of different factors that can really help push gold even further past this record level that we have seen so far. And when I'm trading this and I look to the left and there's nothing to the left that I can reference to, then I just keep increasing my TP as price keeps breaking its own high, establishes a new support, it consolidates, breaks out of that consolidation, and I would increase the TP at like a 1-to-1 pace. So like if your first 1-to-1 is about 70 points, then you increase that TP up by another 70 points and then another 70 points, etc. So very conservative risk management, but you just kind of let the trade run, because right now from a fundamental perspective and a market sentiment perspective, gold has all the support given the safe haven demand that we're seeing, and we're also seeing the weaker dollar, etc. So this week, there's a ton of fundamentals, a lot of things from a macro fundamental perspective or geopolitical perspective that are really going to be supporting our pairs, whether we're looking for buys or sells. The key notes for this week is going to be only trade after the sweep and confirmation. Never enter right before the news is about to come out, like 5 minutes before or 5 minutes right after. Trade the reaction. You're not actually trading the data release itself. So really avoid taking any fresh entries within that 5-minute, 10-minute time frame of when a high impact data is supposed to come out. For NFP on Friday, the first move is usually the liquidity. So we're going to trade the second move. We're going to wait for the massive wick rejections and things like that. Make sure that you're only risking a maximum of 2% per trade, and then move to break even at your 1-to-1, and then trail behind the market structure. So make sure that you have a really good risk management plan in place for this week. With that being said, that's it for today's weekly outlook, and I will see you guys for the next one.